At SpotGamma, we produce industry-leading expert analysis and proprietary levels against the most traded US indices and ETFs. In addition to our twice-daily Founders Notes, our indices page contains many charts and graphs displaying activity across the S&P, Nasdaq, and Russell Indices. These are either live or updated daily for our community so our traders can see options-related flow data in multiple valuable ways. For the purpose of this overview, we will choose SPX as a baseline. Starting with our real-time updates, the graph displays the stock price live against our key relevant levels. Each of these levels is defined within our knowledge base and can act as a form of resistance, support, or create pinning via a magnetic effect as we approach an option's expiration. Next, our absolute gamma chart shows which strikes have the largest outstanding gamma. You can filter these by either the current expiration or the next expiration. The strikes which have the most outstanding gamma, as indicated by call gamma in orange and put gamma in blue on the histogram, will act as the strongest levels of support or resistance. Now for the gamma and delta tilt charts. These charts project the ratio of calls divided by puts overlaid against the price of the ETF or index. The higher the number and peak of the lines on the chart, the more bullish the current sentiment, which tends to mark a top which could reverse downward. Alternatively, the lower the number, the more bearish the current positioning, which could indicate we have reached a near-term market low. In terms of technical calculations, the gamma measurement reflects all of the at-the-money positions, while the delta measurement reflects all of the in-the-money positions and their impact. For expiration concentration, you can see the deltas of calls and puts for every expiration. This is a helpful metric to check as it lets you know about the largest upcoming expirations, which can inform your medium and longer term positioning. Next, combo strikes. Here, SpotGamma provides a combined lens to see the largest outstanding options per complex. We do this by charting the SPX, SPY, and NDX, and QQQ, RUT, and IWM. You can visualize each of these indices and ETF combinations for the current expiration cycle or next expiration cycle. These outstanding gamma levels will act as support or resistance depending on if they are above or below the current price. Next, we have 0DTE volume and open interest indicator, which aggregates all the options trading across the given index and lets you know how much of the volume is based on speculation versus longer term positions. The higher the OI and volume that is 0DTE relative to all outstanding positions, the higher the level of speculation in the market. The lower the OI and 0DTE volumes, the less speculation. Next, we have 4 graphs which reflect the implied hedging pressure relative to gamma, vanna, delta, and implied volatility via the SpotGamma Implied Volatility Index, abbreviated SIV. Each of these graphs can be visualized for the current day against the last 2 days. For gamma, the chart reflects the rate of change for gamma per each of the 6 indices and ETFs. The more vertical the tilt in the line, the more volatility is expected within that range. This view also helps you see how gamma is reflected relative to areas of price fluctuations. These tend to increase following larger options expirations, so it's helpful to pair this chart with the above histogram charts displaying absolute gamma. For the Vanna model, this graph reflects how implied volatility can affect the direction and rate of dealer hedging. The higher the number on the y-axis, the more dealer equity exposure needs to be adjusted. For the Delta model, it's more of a moment-in-time snapshot and shows the expected hedging along with underlying price movement. As deltas increase or decline, dealers need to adjust their delta exposure. The SpotGamma Implied Volatility Index, referred to here as SIV, reflects how much movement we expect to see on a one-day basis. The curve specifically reflects how much volatility will take place relative to a shift in the underlying price. The percent on the y-axis shows the expected move. With the higher the green line, the higher the expected volatility. Next, we see open interest and volume adjustments, which can be filtered by puts and calls. This graph shows you how much the open interest changed overnight and how much volume traded across all expirations yesterday for a given index. Next, we have the index or ETF price versus the 2-month over 6-month realized volatility ratio. While this seems very technical and specific, it's a metric tracked by many institutional investors. The takeaway is that when the ratio declines, we have lower volatility and a more stable environment. This might be a buying indication for large institutions or CTAs. When the ratio increases, we can expect more near-term volatility. The next graph, the SPX realized volatility, reflects the historical volatility on a 5-day, 1-month, 2-month, and 6-month basis. The higher the number, the more volatility is expected in the near future. The last graph is the SPX 5-day and 30-day return histograms. These reflect the percent return over the last 5 days and the last 30 days. In the concentration table, we break out key information by expiration. This helps answer when the most options impact will be exerted on upcoming stock movements. In the SPX strike table, we reflect similar data by specific strike rather than expiration. This helps answer where the most options impact will be exerted on upcoming stock movements. Below is the risk reversal metric. The SpotGamma risk reversal tells you how expensive puts are relative to calls. Larger negative numbers indicate more bearishness, which can swing back more positive and lead to an upward price reversal. Conversely, less negative numbers indicate more bullish sentiment, often marking the near-term top of a market. The last chart is our historical chart. The SpotGamma historical chart reflects how the S&P 500 has behaved over time relative to 3 of our strongest proprietary metrics: our call wall, put wall, and volatility trigger. We hope this comprehensive overview has been helpful to give a sense of the depth and breadth of our tools. When aligned with a methodical trading strategy, we believe these insights can give you an edge and empower you to see what the professionals see.